Hey everyone, welcome back to Mark Loeffler Experience. You guessed it, today's another market update. Comment down below, how far do you think the market's fallen? Before we get into anything, just comment, just do it now. And then while you're down there, smash that like button. It does help the YouTube algorithm. I'm told. I have no idea. Definitely subscribe. Well, so let's do this. Let's get into this. This is not all of Ontario. This does not include Toronto. And this is just the information that I get that's readily available quickly. But it is a lot of different boards. You know, Kitchener, Hamilton, Halton, Barrie, Peterborough, like a whole bunch of different boards out there. And, you know, as you're going to see here, averages are averages, and a few can skew the average. But obviously, if we're looking at all the boards together, look at that. Look at that number. Average price of $813, almost $814,000 in June to $780,000. So that's $34,000. That is about a 4.25% drop. $32,000 off, you know, that about 4.25% drop month over month. And here's the thing. I just read a published thing from Royal LePage saying that we are going to drop 15%. Now, it's funny because I just heard another thing from BMO that we're going to fall 20% from the peak, and that was a couple weeks ago. And I just look here, and the peak was 983, and we're at 780. And if you do the math, we are right. We're over that. So, and if you go back, so October was 812, September was 789. So we are below September pricing last year. Now, if we come out 5 years, right? And we just draw that trend line. I see, that would be nice. If anybody at ITSO is watching, let me draw a trend line, okay? So as you can see, over the last 5 years, we've had ups and downs in this real estate market. You know, lo and behold, this happens. Like, look at 2021. We just went, you know, flat over the winter into the summer, and then we had this huge run up. And now we've come flat again. Obviously, this was the COVID dip, and if you had bought that COVID dip, I mean, you look like a genius. I don't know who would have said that on YouTube. And let's look at, so from the peak, this was the peak in 2017. So this is when we had that little bit of a rut. And we went from 501,000 to a trough. This is April to August, so 4 months. And that pricing went down from 500 to 437. So let's call that $60,000. That went down 12% over 4 months. And then we started this long and slow and steady climb. Well, ups and downs, but slow and steady until bam, COVID. And then, oh, let's print a whole bunch of free money. Woo! So where does this shake out? Where does this eventually land? Well, here you can see this is a trend line from 2009, right? So this is the trend line. Oh, we got super exaggerated here because government stepped in again and tried to change the rules, and people said, oh, I want to buy before the rules change, and then they did. And it all comes right back to the trend line, right? Trend line, trend line, trend line. So is the trend line right about here? I mean, your guess is as good as mine, but that would take us to, I don't know, probably about $700,000 average sale price across all ITSO. I mean, that could be a good average sales price. Yeah, let's just look at all the listings. So this is the listings for, and you can see, look, I mean, December there was 3,500, spiked 17,000 in May. Now we're slowly starting to come down. June, 16,000, 12,000 in July. But here's the thing, we're still up 20% year over year for listings. And I'll go to sales, right? We're down 40% year over year for sales. 1/3 of all houses are selling right now. 1/3. So if you're on the market and you're selling, congratulations, you have yourself a great agent. And if you're not listed with us, maybe think about that next time if your house doesn't sell. And this is not meant to solicit clients of other realtors. I'm just saying. Months of supply, we're up to 2.7. It's probably higher than that because it's a bit of a lagging indicator. But let's look at individual markets here. Look at this. This is a great graph. So Barrie and Waterloo are basically on the same trend line here. And you know what? They're still falling. Kitchener fell more, right? So Barrie's still up 5% year over year. I think that's going to change. Obviously, I think we're going to end up, that's going to be negative for the year, obviously, because last year, just see December, average price was $850 and we're obviously at $775. So we're going to be negative overall for the year. This is probably going to be one of the biggest crashes in real estate history once it comes out and it ends. And that's the thing. When is the bottom? Is that average sale price going to be the bottom, right? So you come out, you do the trend lines, and you try to figure it out to, not try to time the bottom. I think now is a great time to be buying anything that you can add value to, cash flowing properties. Like if I could go walk in and buy a 7 cap, then I have escalating rents, I'm going to do that all day long. Why wouldn't I do that? It makes no sense not to. But as you can see, so London's off $30,000, it's about 4.25%. Kitchener, about the same. Barrie and Waterloo have kind of flattened out, you can see, right? New listings in these areas. Actually, let's go over here first. Niagara is already down 1% year over year. This is back from, look how flat this was. Look how flat. Like there was nothing happening. Then it's like, okay, stuff started happening. This is the 2017 dip again. So, I mean, here's the thing. Like, it has a lot farther to fall, right? Like, it can fall another, it's at 650. It could fall another 150 grand down to $500,000 if that trend line, right? Like, if you take this trend line and, like, it might even go down far. Like, look, you could come down to closer to 450. So, I might not be investing in Niagara Falls right now. That's just me. I might look for areas that I think are going to grow more, that are going to have more of an issue. Like, again, follow the economic fundamentals. Where are the jobs? If people can choose to live wherever they want because they can afford it, where are they going to live? Where are they going to rent? And here's the problem. See, I told you this was going to happen with average sales prices, especially in a market like something like Oakville, where I live. Average sale price last month was $1.5 million. Now it's $1.6 million. And the problem is, like, you could have a number of large homes sell in that range where it's like, oh, it skews the overall numbers. But like if I look here, 1.6 to December, like that's over December's number. So that could be one big house selling, like a $20 million house, which, to be honest with you, I don't think is really that much affected by the interest rates, right? Because somebody buying a $20 million house, well, they might be getting financing, but maybe not. And you can see that these are weathering the storm a little bit better, right? Peterborough here, like it did have a big run up in prices, but it's been pretty consistent. Like it hadn't really, so we peaked here and then we peaked again over 800, and then we've had that decay down to 650,000. So we're not even off 20% in Peterborough yet. And is it because people want to live there and their jobs there, right? Like, it's a nice community. Hamilton, same, right? Like Hamilton was peaked 891,000. And now we're down to 700,000. Just for instance, if you had in Hamilton, if you had your property listed and you've been on the market a month, you've lost 5%. So if you have $1 million house, that's $50,000 because you didn't sell last month and you waited and you're trying to catch the market. You have to get ahead. If you're going to list your house now, you have to get ahead of the market. Number one thing, get ahead of the market. It does not pay to sit there and test the market right now. It's not going to work. Just not going to work. Obviously, we can see new listings are down overall, but we're still up year over year. Peterborough is still up 26%, Hamilton 14%, Burlington 22%, Oakville 15%. And obviously you can see sales are down. Oakville 42%, Burlington 30%, Hamilton 40%, Peterborough 36%. Like these are big numbers, right? So obviously months of supply, days on market are obviously booming, right? But they're starting to flatten out because, again, we're starting to see less inventory and things are still selling. Yeah. And so these, like, I don't know. I'm probably the only geek out here that loves this. Like, look at London. Let's look at London. So it's only up 7.2% year over year for new listings. And like that's a look at the graph. It's fun. So fun. So Waterloo's still up 15%, Kitchener's up 27%, Barrie's up 34%. So what would I expect in Barrie? I would expect more prices to come down because there's more competition, right? It was pretty flatlined month over month. Look at 50% less sales. I think that's going to hurt for a while. I think this is what I'm looking at when I'm predicting where I want to go and how I want to buy real estate. Because I still want to buy real estate. London, 47% down. Waterloo, 30%. Kitchener, 37%, right? As compared to, let's go back. Oakville was down 42%, but Burlington was only down 30%. Hamilton down 40%. Peterborough down 36%. What do I think is going to happen? I think at least... I believe that we still are going to come down. Could we come down to that 720 mark? 650? 700? I think so. What's that, another 10, 15%? We could definitely fall another 10 to 15%. Although one thing that's going to affect this is that long-term bond rates are coming down. So the cost of a fixed mortgage is less now than it was a couple months ago. Variable, obviously still going up. We'll see what happens with that. I know that, they're going to increase more interest rates. And yeah, they're going to overdo it because that's what they do. That's what they do. The Bank of Canada or all these governments overdo it because they look at lagging indicators. I'm looking at lagging indicators right now to tell us that the housing market fell off a freaking cliff in February. But what are you going to do? All right, guys. That's everything I have for you today. I hope you had a great long weekend. I definitely had a great 2-week vacation. Thank you guys all for coming back. Do appreciate you. We look forward to seeing you guys Monday, August 15th at our investor meetup. We'll put the link down below and we'll catch you next time.